In this flash crash, the S&P 500 fell 33%. But even though there was this massive drop, there was an equally astonishing rise because they rebounded within just 3 months. And the S&P 500 rebounded so far that it was the strongest 5 months it had in 80 years. And there are really like 6 major reasons why the stock market rebounded like this. First off, there was massive stimulus from Congress in terms of to investors and to stock market and to businesses, which meant that the losses gained from COVID were mitigated heavily. There were also slashed interest rates, and that meant more people were going to be able to get loans with lower interest rates, more people were starting to invest, things like that. And the biggest reason for this is that there were massive expectations for recovery. There was a lot of optimism surrounding a vaccine for COVID, and there was an expectation that once the vaccine worked and was distributed widely, people would spend way more because they had all of this pocket cash to spend that they hadn't spent during this lockdown period. Third, there was the huge dominance of tech giants in work from home. Tech giants had a lot of products that helped virtual work, so they grew a lot during this period. And there was also massive individual investing. More than 10 million new trading accounts were started during this period, and because of this, there was a huge surge in actual investment into the stock market. And this new individual investing led to a lot of momentum trading, which is when you invest in a stock that is continuously performing really well. So you had a lot of individual investors investing in stocks that are performing well, which caused a positive feedback loop so the stock performed even well, and so on and so forth.
With all this new interest in the stock market, what stocks did well to begin with during the pandemic? For example, consumer stocks did really well during the pandemic as so many people relied upon them to get the necessary goods that they needed to stay safe. Target and Walmart did really well during this period. For example, Target went from $104 a share to $248 per share at the time of this recording, which is nearly a 150% increase in just a little over a year, which is crazy. Tech stocks and e-commerce stocks did really well as well. For example, Amazon went from $1,785 a share during the height of the pandemic to $3,731 per share at the time of this recording. And one of the main reasons for this rise was since people could not go out a lot due to stay-at-home orders and whatnot, Amazon was able to grow even more as people relied upon Amazon to purchase the goods that they wanted. And besides e-commerce stocks, certain tech stocks like electric vehicle companies did very well as well. For example, Tesla had a meteoric rise last year and was the talk of the town for all the year as it went super high throughout the pandemic. And besides Tesla, the entire EV industry as a whole had very high returns, such as NIO and Xpeng in the Chinese market. Those stocks also did really, really well during the pandemic. And besides these tech stocks and e-commerce stocks, some pretty cool industries had their own gains. Stocks like video games did really well, with EA having very strong years. And this also led to certain video game stocks going public in this year. For example, Roblox, which was a private company during the pandemic last year, experienced massive user growth as so many young children began to really start playing Roblox a ton during the stay-at-home era. And this led to Roblox experiencing very strong returns, and that gave them the cash and funding and confidence they needed to go public in March of 2021. And besides the video game industry, home improvement began to gain traction and popularity during the pandemic. As more Americans stayed home and began home improvement projects, this led to stocks like Home Depot and Lowe's rising. And these are just a few industries and areas that experienced growth during the pandemic. And it's really interesting to see how, despite COVID bringing our country to a halt, these stocks still ended up doing really well.
So how does the future look like with the economy and stocks and all those companies? So now, as vaccines have been rolling out and the virus slowly being contained, the economy has been thriving. Lately, I've been keeping track of the Dow, and surprisingly, the Dow is around 35,000 points. Just prior to the pandemic, the Dow was at 29,000 points, and we thought that was the highest it would go, but it's peaked ever since then. Although the pandemic had it appear that all companies were vulnerable and many stocks had crashed during the panic selling in March, most companies have rebounded higher than ever. Many of these companies are built on principles that have been able to withstand a pandemic, and their clear goals have brought them out of that low point in March. Companies like Apple and Amazon, other tech giants, as well as established companies are not going to vanish with just a pandemic, especially Apple. Think about it. It's not like they're going to stop releasing iPhones. That's just not something that's possible. Something interesting that I found was that if you invested and kept all your money during the pandemic instead of panic selling in March 2020 and regularly invested even while the market was low, you'd be at a much higher portfolio value than timing the market and selling your stocks for a lower price during the panic selling.